All right, guys. So today we're going to be going over multi-time frame analysis. This is probably one of the most important classes that you will take throughout this entire mentorship. So make sure that you pay attention. This is how I trade every single day, right? A lot of people that trade like this, they notice that trading, it starts to be a lot. I wouldn't say trading is easy, but it starts to make a lot more sense and it starts to make a lot more money by using multi-time frame analysis. So well, first of all, multi-time frame analysis. So basically, I'm gonna give you a definition of multi-time frame analysis. It allows us to gauge the bigger picture on the higher time frames while spotting entries on the lower time frames. Make sure that you put this in your notes, guys. Write this down in your notes, that part that I just said. It's unlocked. Hold on, somebody drawing on the screen again. Come on, y'all, stop drawing on the screen. Okay, so that's what we want to put in your notes. It allows us to gauge the bigger picture on the higher time frames while spotting entries on the lower time frames, right? Using multiple time frames provides us with key details to confirm or reject our trading bias, right? So basically, in simple terms, what this means is by using multi-time frame analysis, you're able to go in and pretty much have more context to support the reasoning why you're taking a certain trade. So basically, you're utilizing multiple time frames, which will give you those key details that you need. A lot of people, when they get into trades, they be scared that, is this trade going to work? Is it going to do this? Is it going to do that? And they're not confident in taking their trades. And that's simply because they don't have enough context that supports their reasoning, right? So this is where multi-time frame analysis come in, because if you have multiple time frames agreeing, like let's say that you're bearish, if you have multiple time frames agreeing bearish, right, then you're more likely to hold that trade longer and you're more likely to execute that trade, right? So that's where multi-time frame analysis definitely helps at. What is multi-time frame analysis? So another definition of multi-time frame analysis is the process of viewing the same stock under different time frames. It's literally that simple, guys. People make trading simple. I mean, trading hard. It's that simple. All it is the process of viewing the same stock under different time frames, right? So if I'm looking at Tesla hourly time frame, multi-time frame analysis will be on Tesla hourly time frame, and then I come down to Tesla 1 hour, then I come down to the 15 minute, and all the time frames are bearish, so I'm more likely to take that trade and execute, right? So the higher time frames are used to establish a long-term basis, right? So I want you to put this in your notes, right? The long term, the higher time frames tell you like the overall bigger picture, right? That's what we want to use those time frames to understand, like, okay, where's the stock headed on a longer time frame, a longer basis, right? So the time frames that we use to establish a long-term basis is the monthly time frame, the weekly, the daily, and the 4 hour. So those would be your higher time frames that we normally come up with some type of direction, right? We think that the stock is going to go here long term. For example, I think QQQ is going to go to 280, but that's my long term target. But in between, it might have some pops to the upside, it might have some pops to the downside, it might chop, it might go sideways. But overall, my long term, right? My long term bias on QQQ is 280. I'm bearish to 280, right? All right. So the lower time frames are used to spot ideal entries into your play while also providing a deeper look into what you see on the higher time frames. So let's say that you see a bearish candlestick on the daily time frame. Well, the lower time frames are going to provide you with a even deeper look, right? That bearish candle might be a head and shoulders on a lower time frame. It might be a bear flag on a lower time frame. It might be a double top on the lower time frame. It might be anything else on the lower time frames, right? So that's basically providing you more information than just a candlestick pattern, right? Also, the lower time frames are used for entries, right? A lot too many people always ask me, Jay, I need help with entries and exits. I need help with entries and exits, right? Multi-time frame analysis is how you get better at entries and exits, right? By using multiple time frames. Okay. So the time frames that we're looking at for the lower time frames are the 1 hour, 30 minute, 15 minute, 5 minute, 3 minute, and 1 minute, right? Stay with me. All right. So why should we care about multi-time frame analysis? Multi-time frame analysis allows you to uncover the smaller detailed movements in price for well-timed entries. That's literally all it is. Multi-time frame analysis is basically to help you get the best entry as possible and with least stress as possible, right? That's all it is, right? It's giving you a well-detailed movement in price so you can well-time your entries. It's that simple, right? And I'm gonna show you examples on the live charts in a minute. All right, so here are some key notes on, because I know I'm gonna get this question. So you want to use the 1x4 for your top-down analysis. For example, if you want to start your top-down analysis from the hourly chart, your main time frame for entries will be the 15-minute chart, right? So it's 1x4. So basically, to put this in math terms, if you're looking at the hourly chart, let's say that you're bearish on the hourly chart, right? Then you will use 1x4, which will be your time frame that you're on. So 60 minutes, right? You plug that in. So that'll be 60 minutes because that's your time frame. That's 1 hour, 60 minutes are in 1 hour if you didn't know that. So 60 minutes divided by 4 is 15, which gives you the 15-minute time frame for that's your main time frame that you would utilize for entries. Now you can go lower if you want to, but 15-minute is kind of like, that bread and butter time frame if you're using an hourly, right? Depending on what kind of trader you are, right? So that's what you want to do, 1x4. I know people say 1x6, 1x8. I don't really believe that that's necessary, especially with the kind of way that I trade where I aim for high percentage returns. 1x4 works pretty well for me, just me personally. So make sure, let me go through the math one more time so nobody gets confused. All right, so let's say that you're on a 1 hour time frame. Let's say that you're on a 1 hour time frame, right? 1 hour is 60 minutes, right? So you plug that 60 minutes into this TF, that's time frame, right? So 60 minutes divided by 4, remember 1x4, okay? So 60 minutes divided by 4 is the 15-minute time frame, right? In this example, the 15-minute time frame provides short-term developments which will trigger the 1 hour time frame to move, right? So if you're bearish, you're going to notice, let's say that you're waiting for, price to be bearish. You're going to notice the reversal on the 15-minute time frame first. Like you have to realize that, guys. If you're on a daily time frame, the reversal is going to start from the lower time frames and then eventually trigger the daily time frame, if that makes sense. So let me draw an example of what I mean. So, all right. So right here, we have, this is our 1 day, right? This is our daily time frame. So if we're trying to time a reversal to go to the upside, this is what the 15-minute time frame is going to look like. So the 15-minute, actually, my bad, y'all, my bad. Let me erase that. Let me do the hourly. So this is a 1 hour. So what the 15-minute is going to look like, we're normally going to have an uptrend, then a breakdown, downtrend, and the 15-minute time frame is going to trigger that reversal before the 1 hour time frame. So by allowing yourself to catch the 15-minute reversal, is going to give you a bigger move on the 1 hour because the 1 hour hasn't reversed yet because the 15-minute time frame has triggered it first. So let me go back so I can make it make sense real quick. Anybody's got confused again. So all right, starting with the 15-minute time frame. Okay. So in a 15-minute time frame, we can be having price moving up and then, start coming lower. All right. So if you're looking for a reversal on the 1 hour time frame, so this is the 1 hour time frame, right? If you're looking to time this reversal, like let's say that the 1 hour time frame is at support. if you're looking to time a reversal, we're going to want this 15-minute time frame to break this downward trend, right? So once we can draw a trail line or whatever. Once this 15-minute time frame breaks and starts pushing up, that's going to start triggering this 1 hour time frame to start pushing up, right? And that's how you utilizing the lower time frames, because you got in this move earlier. So before this 1 hour time frame started reversing, you were already in this move. And that's how we able to get those 100% gains, because we're able to utilize multiple time frames to time better entries. That what a lot of traders, they're going to wait, right? They're going to wait until this 1 hour chart it started reversing. They're going to wait, right? But whole time we are already in. So by the time they buy it, we already pretty much up 100% deciding if we want to take profits or not, right? And we get that premium push and everything. So that's why multi-time frame analysis is key, because you get the time reversals, and not even just reversals, you just get the time any play that you want. You get the time it a lot faster than most other traders, right? And that's how I'm able to utilize those. I'm able to make, those gains, because I'm in before everyone else, right? So, all right, that's example there. So let's go ahead and look at an example of this on the live charts. So, hold on. So an example of this is pretty much what I utilized this morning while we were on our class, right? So let's go ahead and utilize this replay mode. Okay, so starting from the 1 hour. So if we're using multi-time frame analysis, remember we're starting from the higher time frames, right? So when we go back to our notes, we're on the 1 hour time frame. Let's see. When we start looking at the 1 hour time frame, remember what I said. The higher time frames are used. Well, right now we're talking about top-down analysis. So let's just start from our top-down analysis, right? So we use the 1 hour this time for our top-down analysis, right? So our top-down analysis started from here. And overall, we can say that, all right, price is right now pretty much holding this support level, right? Everybody see that? They're holding this support level. And right here, we have a hammer candle, and we have some type of like bullish engulfing right here. So we're going to look into pretty much that area, right? And we did this morning, okay? So we're going to pretty much go look at this area and see why is it holding support, and try to see, because like if we just buy on an hourly time frame, anything can happen. Like we can get a pullback, we can get shooken out. So what we're going to utilize is we're going to try to make sure that we get the best entry possible from here. So this is what it looked like. So then we're going to come down to the lower time frame, like the 15-minute time frame, and see if we can see, something on there. So right off the bat on the 15-minute time frame, we were able to see that we were in a downward trend, right? Right. So that's right now we identifying that we're in a downward trend. Okay. And then we have a double bottom look setup, right? So one of the things that I told you guys earlier is once we bounce off to that, if that high is higher than that high, then it's more likely to be more bullish. So let's see how this played out. All right, so the market broke. We were looking for that retest. And pretty much that's how we were able to, this was 100% play. And that was from using multi-time frame analysis. So we established that we were bullish on the, what is that time frame called? On the hourly time frame. And we came down and found some more bullish context on the lower time frame. And even you could have came down to the 5-minute if you wanted to, and it still would have been the same thing. So we got that 5-minute downward trend. We broke out, retested this area, and we bounced off. But it all started with multi-time frame analysis, because we were bullish on this time frame. So we waited for more context on the lower time frames before we taking this trade, right? So that's another example of multi-time frame analysis. So also we can go even deeper into it. Okay, so let's go ahead and go back. Okay, so utilizing this same move, go back to the replay mode. Okay, so utilizing this same move from the 4-hour time frame, that's all it is. You see something that you like on 1 hour, on one time frame, and then you come down to the lower time frames to try to find reasonings to support that. So I'm about to write it down all for you guys right now. So this is exactly how I do it. So I'm like, all right, interesting. Okay, right now on a 4-hour time frame, ES, I'm just gonna say SPY for right now. SPY looks like a potential double bottom, right? So I'm gonna put that in my notes right here, right? So I'm gonna say 4-hour potential double bottom. Okay, so that's one context that I have right now. So then come to the 1 hour. 1 hour. Okay, let's let it play out a little bit. Let's see. Okay. So now we have even more context on the 1 hour, right? So we're gonna put that in our notes. So now we have 1 hour. Y'all see right here, this is a hammer candle. Did everybody see that? That is a 1 hour hammer candle. That is a bullish candlestick pattern. Let me zoom in real quick for people that say they can't see. Right there, that candlestick pattern right there, that's a hammer candlestick pattern followed by a bullish engulfing. So we're going to go ahead and put this in our notes. So we have a 1 hour hammer and it's at support. So we don't have to do all that. If you want to, you can. We have a 1 hour hammer and we have a 1 hour bullish engulfing. Okay. So now we have 4 reasons to be bullish, right? So now we're going to come down to that lower time frame, another lower time frame, another one. And there we go. Now we have established a downward trend, one of my favorite types of setups. So now we have more bullish context where now we have a downtrend. So we type in the time frame, 15-minute downtrend break. Okay, so we add that to our reasons to be bullish. And then we have a 15-minute double bottom, another double bottom. Remember, we have a different double bottom than the one we had. So we have 2 double bottoms, right? So then we have another 15-minute. And this is before the, like, look, guys, this is before we took before the trade was even supposed to be taken, right? So all this is showing up before the stock ran up. So now we have a 15-minute double bottom. And then you can also note that second high is higher. That's an even more bullish sign. And for the people that don't know why, if you have a double bottom where, if you see, like, so I can zoom in right here, this was our first bottom, and then here we go, we create another bottom. If you have something like that, that means that sellers weren't even strong enough to push the price back down to this low. So that's an even more bullish sign, right? Because they couldn't push it back down to this low. Most traders think that every double bottom or every stock has to come back exactly to that level. So most traders missed out on this move up because they were thinking that price was going to come back to this double bottom. That's not always the case. Sometimes it will stop higher, which actually it creates an even more bullish scenario. Okay. So now we have all of these contexts, right? So we have, there we go. So we have, what is this? We have 1, 2, 3, 4, 5. So we have 5 reasons to take this trade, right? We have 5 reasons to take this trade. At this point, what are you waiting for? Take the trade, and if it's a loss, it's a loss. Me personally, you have different type of traders. Some traders could have took the breakout. I like the retest. Like if a stock is already breaking out, I kind of wait for a move like this, which I did signal this. Like I did say this in live. I said, I'm looking for a retest of this area. I literally, go watch the class. I said, I'm looking for a retest in this area to make a move up. This is exactly what I said this morning. So let's see if that worked out. So I'm gonna show you how to where you would have entered. You have all these reasons to be bullish, right? So then once it gets to your plan right there, once it get there, you should be taking this trade, right? Once it get there, it's at your plan. You should be executing right away. Let's go look at the risk to reward box. So if you say you were gonna buy it at this retest, stop loss would have been below that double bottom low. Price target this high, right? Or you could have did this high, whatever high that you wanted to, but I already did. My high would have been this top. So then you would just let it play out. So you entered. There you go. And it touched your target right there on the money. The highest point of the downtrend is your target. Okay. And there we go. It touched your target on the money. You are now exiting this trade and then, go from there. Right. So that is literally how you use multi-time frame analysis. And it just gives you a lot, a little stress-free trade, right? It gives you a clearer stop loss. It gives you an easier entry, and it just makes your life a lot easier, right? Now I'm about to enable comments real quick. So that way I can make sure that you guys are understanding. So real quick. All right. So did this make sense so far? So nobody confused. Let me know if you're confused. Cool. And we're gonna go over candlesticks. Don't worry about it. But all right, so that's one. Let's go find another example. Okay. But this is how you were able to make this trade. It's all about just executing, pulling the trigger, and there you go. So somebody asked me, yeah, the more the confirmations, the better the trade. All right, so let's start. Well, let's try to find a new one. So now another one is, let me go back out. Let me go back out. How do you delete this? Okay. Oh, wait, no, I got to X this out first. I'll answer y'all questions in a minute. Overall, the double bottom played out pretty well. It was pretty nice. Here go another example of that double bottom I was telling y'all about, when the high, you see how that high is higher than this one, and it just sends again. So there go another example, and you got a couple of those examples, right? Okay, so how did I do a reversal today? So let's go look at that. All right, so here is the, is this the right one? What's today? Today is the 19th. No. QQQ was, oh, here it is. Okay. All right, so let's go try to use multi-time frame analysis again on QQQ. So right here is the area that we're looking at. So starting off, what I like to do is I always like to plot those levels. So once the market had opened, we had a gap, right? So what I like to do is, and I told you guys this on Sunday, I like to plot those areas where the gap has, like, the gap starts, because a lot of retail traders try to like take the breakouts above. So I like to use those levels as areas of significance, right? So that area of significance, as you can see, when the market gap down, I immediately proceeded to plot that area, right? Because this is the gap that we're looking at. Let me delete it real quick. This is the gap that we're looking at. Okay, stay on topic, guys. This is the gap that we're looking at, right? This is the gap that we created this morning, right? So what I did was I made sure I plotted those levels for future references if we ever come to them, so I can make a trading opportunity off of, right? So I plotted that level, and I knew that if we had two things. We could have rejected here, or we could have rejected at the neckline. Regardless, I was looking for, and you go back into my charts, I was looking for a move like this, where we touch here and reject, or a move like this, where we break above or we break above right here and reject there, right? So either way it went, I was fine with whatever way it decided to do, right? Why did I want to take rejections? Well, because we're still in a what? Why did I want to take rejections? We're still in what? A downtrend, right? We're still bearish. So I'm still want to take rejections if we can't break above, okay? The only way I was considering calls is if we break above that high, retest it, and tell me now that this bearish trend is now over. Until that, I didn't want calls at all, right? As far as this play go, okay? So that's what I was looking for. So I was patient enough to wait for that. You know, this morning, people were trying to take puts too early, right? You have to take, if you're going to take rejections or anything, you have to take them at a level, right? Too many people trade in midair and they wonder why they get stopped out, or they wonder why they lose on the trade because they keep trading in midair, right? Stop trading in midair, guys. It don't work, okay? So this is my bias. We either reject there or reject there, okay? So that's pretty much what I was waiting on. So here we go. Let's play it out. Because remember, we were bullish, right? We were bullish on the market at first. So then I was, we're looking at the bullish. So then I'm not finna chase it. I'm gonna just wait and see if we can become bearish again. So here we go. Let it play out. Okay, damn, they didn't let us get that candle. All right, hold on. Replay. Come on, replay. This is the candle that we took. Hold on, I'm trying to get y'all to see it. Okay, come on. All right, here we go. So let's play it again. Okay, right here. So here we go. So right now we're at that level, and pretty much we were rejecting it, right? Everybody see that? We were pretty much rejecting it. So that was right there, caught my eye that we were rejecting it. So that already put puts on my radar, right? So now we want to look into this candlestick on the lower time frames and see if we can catch a move to the downside. So now we're in a 1 hour. We're going to work our way to the downside and see what we see at this level. So for the first thing that we see, we don't really see too much to say get into this trade. We just got a bearish candle and it's having trouble breaking above. So right now we're going to just let it play out and kind of see. Okay, so now, as you can see, we're now rejecting underneath that level. So we tried to break above and we came back down, and now we're really starting to wick at that level, right? I'm trying to get the counter that we entered on. Okay, yeah, it was that one. All right, my bad, y'all. I'm just trying to make sure I get y'all the most accurate. All right, so now overall, we're looking to take rejections at that level. So right now, we don't have enough bearish context to kind of tell, like, all right, are we going to reject this level or not? So that means we have to come down to the even lower time frame to kind of see if we got, an entry. So right now, we had this. Anybody know what this candlestick pattern is called? The evening star, right? So we have our first bearish candlestick pattern. We have an evening star candlestick pattern, and then we finally broke below that level. So this is now where I'm signaling I'm taking puts at, right? Now, I'm not going to lie. I did take puts around below here, and then we wigged back above a little bit. And that's why I was kind of getting scary a little bit for people that maybe got stopped out, because we did have like a little pump. But overall, we were still able to hold it. Yeah, those wicks were crazy. And then that's when we had the breakdown. I think it was that wick right there. Then we had the breakdown. All right. So overall, you're not going to always get the best entries, but we were able to enter on here. We went a little red, maybe like 7%. We didn't go really red at all, but 7%. And we also created a double top, which made me stay in this trade longer, right? We made me stay in this trade longer. We created a double top. And also, if you were utilizing multiple time frames, the bigger time frames, we couldn't even hold above on either the 15-minute candle or either 15-minute candles, or even on the 1 hour candle, right? We never could break above and hold it. So that's when I went ahead and took my entries. Like, you're not going to always get the best entry. That's why you got to be able to understand, how price action works, right? But yeah, that long wick was crazy, but at the same time, that's why you be patient. It still formed that double top. The only way I was exiting this trade was if we have a break above here, retest it, and go higher, right? We never did that, right? We never did that. We never could stay above. The other time frames can stay above. And that way we were able to hold this trade and trust our charts, and we were able to profit. Now, the reason why I did not go with OTDE is because of the volatility. And this week, we are going to have a lot of fake outs. I already was preparing for that. So I personally did not go OTDE, but some people did, and they made 100% return. I made about 23% on this trade, but that was why I took it. So it started from the 1 hour time frame, rejecting that level. And sometimes on the 5 minute, you will have, stuff like this. But overall, it was still wicking, rejecting, getting weak. And then we broke down. Okay. And I had a target right here. It actually hit my target on the money, actually. So it was this next support level right here, 87.50, and it hit it on the money, right? So let's go back to the 5 minute. And it's all about multi-time frame analysis. Go there. All right. There we go. And that's when we're taking profits, and boom. Now you can hold runners. I did try to hold a runner to go sweep those lows, but it decided that it didn't want to do that. And we ended up getting like a little reversal back, but it's all good. And then there you go. It went to our target. There you go. Yeah, and then now y'all see right now, there should be no reason to be holding this, because now it's basing at that level, right? We're consolidating, it's choppy, and now, it's time to get out the trade. It's failure to go lower, then we have that pop up, and it does what it does. I was also looking to take rejections there again, right there at that same level, but I was asleep, so I go lie to you, I was asleep, so but overall, it just pretty much just started chopping in this range for the rest of the day. So, but do this make sense so far? Everybody sticking with me? Do y'all think y'all understand multi-time frame analysis? It just take time, guys. Like, a lot of people, they try to like look at class and then think they're going to get it right away. Like, you're really going to have to practice it, right? You're going to have to practice starting with the higher time frames and then working your way down. So let's go look at some examples that we did not take, but let's just see if we can find it on the live charts, right? So let's see, let's look at NVIDIA. Let's just look at a random NVIDIA. Let's see if we can find the reason why the stock did what it did. Okay. Okay. So right here is when we kind of started a little reversal. So let's see if we can find something that gave us why this candlestick this pattern decided to work, right? Why did it decide to push up on the video? So starting from the daily time frame, we see that it's at a support level, and then we created this bullish engulfing. So now we want to take a deeper look to see if we could have timed this pop up on the video, right? This is about a $4, $5 move on the video. So let's see if we could have found anything before this candlestick happened to time this, right? So let's go down to the 4 hour. So right now on the 4 hour, I don't see too much, right? I don't really see too much on the 4 hour time frame on the video. So right now we don't have nothing on the 4 hour time frame right now. but we could put in our notes, we have a bullish engulfing. So we have a 1 day bullish engulfing. So I have a 1 day bullish engulfing. So let's go down to the 1 hour. I see what y'all trying to do. I don't personally like it. We have a downward trend where we decided to break out of it, retest it. So that provided entries right there. Right here would have been an entry right here on that retest, and you would have caught that move up. But let's see what else on the lower time frame. So you could have said, all right, we're breaking and retesting, right? Remember, this move, this pop hasn't happened yet. This is the 2 candlesticks before that candlestick. So that means you would have seen this retest right there. So you could have said 1 hour. And this is going to take time. You just got to practice it. 1 hour break and retest. And literally how I got better at it, I just did this. I was just going in, looking at random charts and seeing if I noticed anything on why it decided to make that move up. So we got a 1 hour break and retest. Let's go down to the 15-minute time frame, see what we can see. Failures to go lower. So we can say 15-minute failure to go lower. All that is basically when you see price it's trying to go lower, but it's having trouble. So it just start consolidating. So you could have said failure to go lower. That's a bullish sign. I'm going to teach you guys how to spot failures to go lower. So we have a 15-minute failure. I'm going to just put low, failure low. Kind of like, I don't really like all this, but you know. Looks like a big, I didn't even see this. A big inverse head and shoulders. I didn't even see that, but yeah, it's there. I'm drawing it ugly right now, but y'all see it. Y'all see it. So then we have a inverse head and shoulders. So now you have, it's just all of that, that's all trading is. It's just finding more context to support your reasoning for entering the trade, right? So we have a 15-minute inverse. Do y'all see the inverse, or am I tripping? Y'all see it? Cool. All right. Then if you want to keep going lower, you can. You don't have to go that low, right? I'm gonna tell y'all this because I get this question all the time when it comes to trading. People ask me all the time, Jay, what is the best time frame to enter on? The time frame matters about the type of trader you are, right? So if you're a more riskier trader, or you like better, like the best entries possible, and you have your emotional, you know, like you're not that emotional on pullbacks, then you can probably enter on a 1 minute or the 3 minute time frame, right? Because you understand that we're going to have pullbacks, we're going to have, you know, all of that. You understand that you can live with a red candle. But if you're a person that as soon as you see a red candle, you get the shaking or getting to question yourself right now, then you need to be using a higher time frame. The higher the time frame, the slower that it moves, which can allows you to hold your trade a lot easier, right? Until you're able to get those better time frame entries. Don't, just because you see me on a 1 minute time frame, that don't mean nothing, right? I'm probably just get a better entry than you, but overall we're catching the same moves. Does that make sense? So if you're a person that literally hate pullbacks, literally, like as soon as you see a red candle, you think that Biden came out and said something on the news, you need to be on the 15-minute time frame and up. You can still get your entries off the 15-minute time frame, guys. It's just a slower entry. That is all. You're going to miss out on a couple more percentages, nothing too crazy, right? It's the same thing. Now, if you're a person that's like, I don't care about red candles, I love red candles when I'm in calls, the 1 minute time frame is fine with you, right? So it's totally up to you as a trader, right? The time frame just matters. It literally, you have to trade whatever time frame matches your personal emotions. Trading is an emotional game, and you have to figure out what matches your emotions, right? If, like I said, don't try to, I'm telling y'all right now, I'm gonna be honest with y'all. The 1 minute time frame ain't for the weak. It ain't. I'm telling y'all that right now. Yes, you get better entries. Yes, you probably make a little more, you make a little more money if you're able to hold through it. But the 1 minute time frame will shake you out if you don't understand, or you're not, you're all over the place. The 1 minute time frame is not for you, right? It's too much noise for you, is whatever, right? The 1 minute time frame isn't for everybody. Now, move on to the higher time frames. Okay, the higher the time frame, the better. So, but does this make sense? Like, I'm just trying to make sure we're gonna have the way I do classes, guys. I keep going over them until people understand it. So we're gonna have like 10 more classes on multi-time frame analysis. But today, I want you guys to. You have homework tonight, right? And you can't see the homework tab just yet. But guys, I'm gonna tell you this right now. It's a lot of you guys. I want you to keep it clean, bro. Like, don't be sending me charts and then give me a long message afterwards. Put all of your stuff in one message, right? Matter of fact, if it will make your life easier if you put it in a PDF file and just put the link in the chat. But you don't have to do it that way, because I know some of y'all don't know how to do PDF files, don't know how the world we live in right now. But for homework tonight, I want you guys to do practice multi-time frame analysis, at least send 3 charts, right? So start from your higher time frame. So let's go back to the notes, and I'm going to drop this in the chat, our notes. That way you can have them. So you can have this PDF file so you can go back and look at it. But understand, guys, you want to start from the higher time frames and you want to work your way down. Keep it simple. Don't overthink it. All you're doing is, if you're bullish on the 4-hour time frame, you're going to plot why you're bullish on the 4-hour time frame. Then you're going to go to the 1-hour time frame, find another reason why you're bullish. You're going to come down to a 15-minute time frame, find another reason why you're bullish, and then you're going to take your trade, right? Keep it simple, guys. Keep it simple. Yes, mentees, if you want to do it again, you can. Practice make perfect. But guys, a lot of you guys are going to overthink this class and think like, I don't know what it is. Y'all going to just make it harder than what it is. If you're bullish, I'm going to say it one more time because I don't want to hear it. If you see a bullish engulfing on the 4-hour time frame, right? Then you're going to come down to the lower time frame, and you might have a bullish engulfing might be a double bottom on the lower time frame. So then you're going to have a double bottom. Then maybe on the 5-minute time frame, it's a downward trend break to take entries. That's all bullish. That's all bullish. Yes, this will be a little bit today because it's only 8. So that's all bullish context, and you will tell me in your homework, I'm taking my trade on this time frame because, right? Keep it simple. Keep it simple. I'm going to teach you guys chart patterns, but right now, keep it simple. Keep it simple. Whatever time frame you want to enter on. So remember, we just said that. Whatever time frame. So if you like something you like on a daily time frame, then if you want to wait to the 1 hour, you can go on the 1 hour, right? It's all up to you. Homework is due Wednesday before our next class. I'm going to teach y'all bullish and bearish engulfings. Right now, you just want to find bullish stuff, right? If you got to look it up online for right now until I teach you guys, then that's fine. I'm going to check. But before we get off the class, is anybody confused on what we just went over today? Guys, do not be afraid to say if you're confused. Yes, we have a homework tab. Yes. 3 different stocks, 3 different charts. So it's going to be a lot of homework tonight. There's going to be a lot of charts being sent tonight, and I'm okay with that. I'm gonna put a detailed image of the homework. I'm gonna help y'all out. Don't worry about the gap. The gap wasn't about, guys. The gap that's another class, right? That was just a reason why I took the trade, but I still use multi-time frame analysis. Don't understand, guys. We're talking about multi-time frame analysis right now. That's it. I will teach you about the gaps. I will teach you about the candlesticks, all of that. It's just multi-time frame analysis. So we're looking for a bullish or bear. Whatever one you want to do, you could look for bullish or bearish. Any recommendation for beginner stock? I mean, you can practice any stock, guys. Just look up random stocks, Walmart, any of that. Put in a homework tab, and I just look over them, and how I like to do it is I look at the homework tab, and then the following class, I see what a lot of people are. If you're good at it, then I like recap it so you guys get better, and I'll also show you guys like which homework was probably the best out of all of them, so you can have a good example. I will drop the chart patterns and whatever. The old mentees, send it in the actual mentee chat. That way we don't cloud it up for right now. It'll be right after. I'm not sure when the first quiz is yet. The play has to already happen, guys. The play has to already happen so I can actually see it work. Like I want to see your entries and everything. Like the play, don't find a play that ain't happened yet, right? I want you to find a play that that already has happened. I'm gonna send. It's gonna be in the homework tab. It's not out yet. I gotta upload it. I gotta like view it, let you guys see it. And I'm gonna type in. I'm gonna give y'all the example of what I want. I don't got the replay function though. That's fine. You don't need the replay function. You just show me on the charts. The replay function was to show you guys. Yes, this is a great question. Do I use multi-time frame analysis process on every trade I take? Yes, every single trade. I never take a trade without using multi-time frame analysis ever. Ever, 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 ever. Do Wednesday before class? Yes. I never take a trade without multi-time frame analysis. I literally don't even know how to take a trade without multi-time frame analysis. Like, what the hell do? You just buy something? Like, I don't even know how that works. No, you find your own trades. Yes, at least 3 time frames. Yes, I like at least 3 time frames. Should we use different tickers so we don't end up? I mean, yeah, like some guys, some of y'all gonna have the same tickers. That's fine, but use whatever tickers that you want. But like guys, I'm gonna just say it again. Keep it simple. You guys, like I have to keep saying that because I know a lot of people are overthinking already. They talking about the gap. They talking about all that. No, that ain't what we're working on right now. We're talking about multi-time frame analysis, right? You're just finding if you're bearish on the 1 hour, then you want to find on the lower time frame supporting your bearish context, right? Y'all thinking too much. Y'all thinking too much, right? Focus on multi-time frame analysis today. Yeah, so the recording is going to be up so you can go back and recap it, but it'll get better with time. I know a lot of you guys are new and you probably never heard of multi-time frame analysis ever in your trading career. So I know it's like a different language, but I'm telling you right now, it's going to change the game for you for sure, right? It's going to change the game. It's going to change the game. Like you're going to be looking at trading a lot. You're going to look once you like take the time to actually like learn it, you're going to be looking at this like, oh, damn, like, oh, you know what I'm saying? Y'all gonna be like, oh wow, like I really this is a lot easier to take a trade when you having multiple time frames agreeing with your reasoning. It's kind of like me, like think about it. A lot of you guys look at me to like kind of support your reasoning for taking a trade. Like if you want to take SPY puts, a lot of you guys want my opinion on SPY puts to see like, oh yeah, Jay agreed with SPY puts, so I want to do SPY puts. So basically, this is allowing you to take me out the equation, right? Now you have multiple time frames agreeing. So you got 3 J's. That's literally that's what it is. You have 3 J's agreeing with you, right? Agreeing with your trade. So then you able to take the trade. Okay. Now, if you didn't did your multi-time frame analysis and I'm doing my multi-time frame analysis and I agree on what you agree on, then you know that's how Chase Bank plays start coming into picture, right? But other than that, I hope everybody understand this. We're going to go over this again. I want to see you guys' homework so I can kind of see like what I didn't explain well and what I need to explain better. This is pretty much the best explanation I have for right now. So I would need the feedback based off of your homeworks. So other than that, guys, I will see you. And I just noticed today that some people don't know what candlesticks are. So I didn't know we had to go back that far, but it's all right. We go back. Candlesticks are pretty easy. Actually, no, I got something for you guys. I'm gonna still go over candlesticks, but actually I have a class on candlesticks already that I can give to you guys from the previous mentorship. That way we don't have to worry about it. I mean, I still go over it, but that way you guys can watch that video and this video, and then you can have a lot more context, right? You can have a little, so I got you. And I'm also sending a PDF file. So other than that, I will see you guys tomorrow morning. And I want to see you guys homework, right? If you don't want to do the homework, then don't be mad if you can't grow your account. Do the homework. It's going to be worth it. That's how you get better at trading, right? If things that you are scared to do, because a lot of people want to avoid this because they're going to feel that it's complicated. And that's going to be the reason why they can't grow their account, because they avoid the hard things. They avoid the hard things, right? But all right, I'm about to send the videos. I will see you guys tomorrow. This video will take about an hour and a half to upload. So once that's done, it will be sent to you guys. All right.